Hello traders, Gary Wagner here, just after 11 o'clock in Honolulu, 4 o'clock in New York. It is Tuesday, December 13th, 2016, and this is the Daily Report for Gold and Silver. On the heels of a Dow Jones Industrial Average at a new record high, quickly approaching 20,000, we do see pressure in the precious metals markets today, with gold trading lower on the day, off by about $5. We're looking at the continuous contract of COMEX Gold, 1160 and change. The low today has been 1156, and the high on the day has been 1167, putting it down about 0.4%. Now, silver also is selling off today, but in terms of percentage drawdowns, is certainly leading the pack today, off by about 1.25%, now below $17 at $16.97. The low has been $16.83, and the high $17.23. So traders, today's downside move in the precious metals complex, specifically gold and silver. Platinum was up a little bit, but specifically gold and silver are really alluding to further pressure in gold and silver pricing. Our current target right now is below where the market currently is. I am looking at a 78% retracement as being the next logical point that we would look for some sort of support to come into the market. That, of course, is unless the market does, by some miraculous sense, recoup, begin to find support in this area, and then break back above that 1170. A break above 1170 on a closing basis would really signal something different. But all things being equal, I think we could see continued pressure as we go into the end of this year, and especially with U.S. equities running to new all-time highs almost on a daily basis. Until that risk-on environment cools off a little bit, I don't really expect to see any kind of major bounce in gold pricing. That being said, there's a couple of things that we want to look at. And in that context, there are really two key facts that I really want to hone in and highlight at this point. The first fact is when we take a long-term view of the market, since the market hit these all-time historical highs back in 2011 at 1920, we can characterize year after year as having a consistent lower low and a lower high. Go into the next year, you're going to find the same thing, lower highs, lower lows, and that's because the market has absolutely been in a decline from about 2012 up till the end of 2015. Now, I really believe, and even at this point still maintain, that this year we saw something majorly different, and that was the fact that we saw a new high, a higher high than the previous year, and a higher low than the previous year. Now, I'm saying that in light of the fact that we have seen this market come down from about 1382 down to about 1170 and below. But what that means is that we are truly in a different environment than we were when this market was selling off. And yes, the market is under pressure right now. However, it is my belief that there is still a pretty reasonable probability that we could see gold prices spike dramatically higher and move back into rally mode the first of next year, just following the inauguration of President-elect Donald Trump. The reason I believe that is the optimism that we have now. The sentiment is being fueled by a belief that policies and his style of leadership will lead the United States, as well as the free world, into a time of increased prosperity, global growth, certainly economic growth here in the United States, and that's based upon a belief. Now, once President-elect becomes president, meaning after the inauguration, then he will be judged by implementation of those policies and implementation of his style of leadership. And based upon that, we could either see a continuation of this rosy optimism, or we could see a dramatic 180 turnaround in which we saw equities prices coming under dramatic pressure and safe haven investments really beginning to come into a limelight and being the asset that performs best in 2017. The truth of the matter is we don't know. The future hasn't been written, but what we do know is that we are about to enter uncharted territory. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow on Fed Decision Day. Bye-bye.